Good morning, all. Today is Wednesday, the 15th of June, and time is currently 9:27 a.m. Look, I'm sure the majority of us need no reminder that it is actually FOMC day this evening at 7 p.m. For me, at least, based in the UK, the FOMC will announce its latest rate decision for the Fed funds target range. Look, just before I roll things over, let me just quickly run through the disclaimer. So look, the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Look, really, guys, all this is saying is this is an educational presentation and does not constitute investment advice. Look, so as I've already said, it's FOMC day, 7 p.m. this evening for me. The FOMC will announce its latest rate decision, along with the statement and the FOMC economic projections. Now, 30 minutes following this, of course, Fed Chair Powell takes to the stage. Here, it's essentially composed of a prepared statement and press questions. Now, look, really, guys, this is where we can really see some volatile moves in the markets as questions are posed to the chair that can lead to unscripted answers. We will also be posting a link to the presser through our social media channels nearer the time, of course. Look, just as a quick note for the FOMC projections, these are released 4 times each year. And really what this document is the meeting participants submitting their projections for the most likely outcomes for for GDP, employment and inflation for the next 2 years. Here we also get to see the latest Fed's dot plot, which is essentially what the US central bank, which is what the Fed, each of the 12 members of the FOMC, which is essentially the rate setting body within the Fed. And what this does is the central bank uses this to signal its outlook for the path of interest rates. So the dot plots, from my perspective, will be key in driving the market reaction this evening. Now, what's crucial here is the picture has drastically changed over in recent days, as much as a week. For the most part, a 50 basis point hike was essentially baked in. Now, money markets have now almost 100% fully priced in the possibility of a 0.75% hike, so 75 basis points. Now, look, just to be clear, a rate hike of this magnitude, for me, really signals that the central bank is struggling to tame the clearly soaring inflation, which clocked 8.6% in the recent release, and this is the highest since 1981. Now, look, the current target rate is 0.75 to 1%. Just to give you some context of where we currently stand right now. Now, I read a recent article by Ing Economics, and they stated the following, and I really do agree with this. While a 75 basis point move is not certain, we, that is Ing, doubt such potential leaks to the media are a coincidence. And they do appear to, this is Ing analysts, of course, as a successful attempt to adjust expectations during the blackout period, which prepares markets for the potentially larger increase. Okay, so look, with that in mind, I'm just going to spin things over to the charts. Now, look, this is the US dollar index, guys. So the US dollar index, ahead of the event, we can clearly see the buck modestly pulling back and essentially giving back some of its recent gains. Look, this is as I said, the US dollar index, and this is really a geometric weighted average of the dollar's value against 6 major international currencies, which includes the euro. Now, the euro if memory serves me correct, constitutes a weighting of around 58%, I think 57.6% to be precise. Look, so the main thing is the US dollar index, this is the daily time frame, is engaging with a decision point zone at 105.61, 104.87. And we have been higher, as you can see here, for the last 1, 2, 3, 4, 5 consecutive sessions. So we've had a 5-day winning streak. Now, currently, the US dollar index is on track to snap that winning streak from this decision point. Look, do bear in mind this decision point is also bolstered by the potential RSI negative divergence. As you can see here, we have the RSI recently touched gloves with the overbought threshold of 70. And look, we are seeing some potential bearish divergence form. But, given the clear uptrend we are in right now, this is not really divergence I have confidence in. So look, as I've just said, we remain in a clear uptrend right now. This is what I would really call the primary bull market. This is a primary bull market trend, right? So from January, from 2021, we have penciled in a series of higher highs and higher lows, right? And this is since price made contact with support at 89. I believe that's 23. Sorry, guys. So yes, since that time, we have been higher in the US dollar index. Now, look, interestingly, if we zoom out to the monthly time frame, we can also see the US dollar index has been overall higher since early 08. As you can see, a series of higher highs, higher lows, higher highs, higher lows. And we've recently just this month, just last month, in the month of May, we have reached a refreshed multi-decade highs, right? So, and that was registered last month at 105.05. But now look, as of current price, we are extending that rally. As you can see here, we are now in not so much uncharted territory, but we are in a considerably bull market for the dollar. Now, as you can see, for the US dollar index year to date, whoops, sorry, I didn't mean to do that. Year to date, we are up 9% year to date. Okay. So this is just something to bear in mind in relation to the overall trends the overall trend we are seeing in the dollar index. Now, I do expect the eventual outcome of tonight's FOMC decision to be supportive of the greenback. As look, I really do not see the market transitioning to a bearish phase with the Fed, clearly in a entrenched in a tightening phase, and the clear-cut bullish primary trend that we're seeing right now. So yes, I am. Although I cannot obviously forecast the initial reaction to the FOMC event, I do anticipate an overall bounce to an overall continuation higher for the dollar. Now, just going over to the euro dollar, I'm really only going to be touching on the bigger picture here. So this is the weekly time frame at this point, and this is the daily time frame. So look, from the weekly time frame, you can see in almost a mirror version of the dollar index, we have been entrenched within a primary bear trend right now, right? So a series of lower lows, lower highs, lower lows, lower highs, and each time we've broken a support, we have retested. Look, it's almost picture perfect, right? So we broke through this major support area at 1473, 1583. We retested the area. We broke through this support at 1174. We retested the area. Again, we broke through a Quasimodo support back in late April. And we recently did retest this zone. And look, we've sold off nicely. So really, I am bearish on the euro. Yes, I am bearish long-term on the euro. So I do ultimately expect the follow-through selling to eventually take over the 2nd of January low at 2017 at 0.340, which means the quasi-minor support at 0.377 on the daily chart is also likely to be overthrown. Now, finally, I just wanted to touch on the dollar yen, of course. Now, the dollar yen. Just bear with me, guys. Sorry about this. The dollar yen has been, you know, it's certainly flexing its financial muscle over the past 2 weeks, right? So at the beginning of June, we saw the dollar yen rally nearly 3%, and the subsequent week again nearly 3%. But the key point is we've recently touched the 28th of January high of 2002. So we are now testing this higher here. Now, if we break above this high, look, we could, we could actually see a potential. Let me just see if this works. A potential one-to-one move, which comes in around 149.17. Now, this is really longer term. Now the one-to-one move is essentially an AB equals CD bearish formation at this point. But look, really for me, the key is the 28th of January high. If we do break that level, I will then be looking around the highs above at around 147.63, and that's the it goes all the way back to 1998, as you can see on the 20th of July. So if we break this, I am very, very bullish on the dollar yen. So yes, it's mainly the same across all time frames. The weekly, the daily, as you can see, weekly resistance, as you can see, weekly resistance. But I will say this, for the past a couple of days, we have seen momentum to the upside really take a hit. And you would be able to see this on the, you can see this on the daily time frames RSI. Do we have early bullish negative divergence on the RSI? That's still a question for me. I'm not sure, but we can clearly see upside momentum has certainly diminished, right? And we can also see this with the ascending channel here. This is all I've really applied the channel to this chart for, is to show that momentum to the upside has certainly taken a hit. Now, this could be just as markets await the FOMC decision, and the catalyst from that decision will likely see the dollar yen eventually take off higher. So look, that's it really from me, traders, ahead of the FOMC event. Look, we will be posting the results of the FOMC decision and obviously the video for the presser, so we can watch this live. Any questions or comments regarding today's content, please feel free to contact us at market analyst at fpmarkets.com, or alternatively support@fpmarkets.com. Look, guys, as always, trade safe, take care, and thank you very much for joining.